welcome back to the channel. I came across this website, Visual Capitalist, which I believe I've seen something like this before on another channel, but I still found it quite interesting and decided to do a quick video on it to show some of you guys who may not be aware. And what I really like about this website is it gives you visualization aids, which, as we all know, pictures speak 1,000 words, and it really puts into context the volume of the markets when you can actually see how 1 billion, 2 billion, a trillion really looks like. But when you look at the broader picture, how really insignificant the things that we see published daily in the news, that these mega corporations, these huge power players, represent a minimal impact on how large this money market really is. So I'll move straight ahead and introduce you to comparing the world's money and markets. So this was published back in December the 20th, 2015. So it starts with showing each square of this size here represents $100 billion. Okay. Now, Bitcoin, the value of all Bitcoins is roughly equal to $5 billion today. The market capitalization of this cryptocurrency reached a peak of 14 billion in 2013. So $5 billion is this size, a tiny little speck. Okay. And then it moves on to the silver market being this size, which to me looks 2 to 3 times bigger. So over here, silver, the value of all above ground silver stocks, estimated by some at 1 billion ounces, is 14 billion US dollars, using a $14 per ounce spot price. So now, obviously, spot is moved up to, I believe, $17.50. So it's just an easy jump up to 17.5 billion. Now, obviously, a lot of this information, do take it with a pinch of salt, because obviously there are fluctuations in the prices that have been stated because it's an outdated publication. So, moving on. The world's richest people, according to the latest Forbes ranking of net worth. Bill Gates is the world's richest person, again with a fortune of $79.2 billion. Now, as I previously stated, take it with a pinch of salt, because this is only published by Forbes, and there are many people far more wealthy than Bill Gates. However, because it's not in the Forbes ranking, it's not declassified. So, in terms of this publication, Warren Buffett is slightly behind Bill Gates, I would say, from those images. It doesn't break down what his net worth is, but as I say, this is an outdated publication. And Carlos Slim, again, I mean, you can say, 100 billion, 100 billion, 100 billion, roughly between the sizes. I mean, what's a few billion between friends, eh? So, taking that into context, one of these guys could easily buy all the above stock of silver and still have a huge amount of cash left over and wouldn't even affect them. So that really does put the silver market into context. When you hear many other channels saying it will only take one billionaire to buy out the COMEX, well, you got 3 billionaires here, and there are a lot other billionaires out there So even if they put 1% of their net worth into something like silver, that's it. It's game over for silver. You won't be able to buy any physical. So moving on. So here we start getting into the world's biggest companies. Apple is the world's largest public company by market capitalization, worth 616 billion. So here we are with 6 squares, which is 6 Bill Gates, subject to this valuation, plus a little bit extra. I'd say probably about 3 total above ground inventory stocks of silver on top. So that shows you just how massive this company is in value, or in perceived value. Depends how you perceive value, I guess. Anyway, so we got Alphabet, which is the mother company of Google. You got ExxonMobil, you got Microsoft, and you got Berkshire Hathaway. Now, it really does show just how large these companies are. Now, moving on to the next one, we have the Federal Reserve balance sheet. Between 2008 and 2014, the Fed's balance sheet jumped to $4.5 trillion from $1 trillion due to controversial quantitative easing programs. So before quantitative easing, it is telling us we have 1 trillion worth of Fed balance sheets. But during the quantitative easing phase, which we all know has never actually really stopped, officially it has stopped, but unofficially they've been printed to oblivion. So during the years from 2008 to 2014, which is outdated information, we're already 2 years past that, they've increased it by $3.5 trillion. Speaks for itself. And then just compare it to Apple. Apple slots in down here. You can have 1, 2, 3, 4, 5, 6, 7, 7.5 apples to the whole Fed balance sheet as of 2014. But obviously, with Apple stocks going down today and the quantitative easing increasing, it's probably going to be double that again over here by now. So you could be going into 9 trillion on the Fed balance sheet. So moving on, we have coins and banknotes. The total value of all of the world's coins and banknotes is roughly 5 trillion. So that's the real paper, the real coins. This is not the ones and zeros that you see on your internet banking or on your statements that come through the post. This is what is circulating around the globe. $5 trillion. Moving on. So this is a good one. Commercial real estate. Institutional investors, with 1/3 of them public real estate companies, own about $7.6 trillion of commercial real estate worldwide. This is still a fraction of the total real estate. The dark blue on the top represents 36%, which is the Americas. You have the light blue, which is representing 31%, which is Europe. You've then got the brown, which is 30%, which is the Asian Pacific. You've then got 4%, which is the Middle East and Africa. Moving on. Gold. The world's total above ground gold reserves are estimated at 183,600 tonnes by the World Gold Council. Using a $1,200 spot price, the world's gold is worth 7.8 trillion. And as we all know, it is now approaching close to $1,300. 17% held by IMF and central banks. I wonder how much of the rest is held by the billionaires. Narrow money. According to the CIA fact book, maybe someone can tell me exactly what the CIA fact book is, because I wouldn't trust it. The total value of the world's easily accessible money is 28.6 trillion. This includes the world's coins, banknotes, and checking deposits. So that's more than 3 times, getting on for 3.5 times the above gold stock. And you just see how silver compared to this. Silver was one little square. Gold is fairly large. It's got a substantial amount. However, being such a rare commodity that it is, you just got to watch how, in comparison, itself is so insignificant in the world we live in today, and how much more it multiplies when you look at silver. So, moving on. All stock markets. And here's a little diagram representing Apple, the company. So, the market capitalization of all of the world's stock markets is equal to $70 trillion. That is 10 times the gold amount. So, $70 trillion. 52% of this is the US stock market. Massive amount. So, what you have to understand is how much the US stock market will affect the world. It's 50%. So, if something drastically happens in America, and you're living in China, you're living in France, Spain, Europe, the UK, Japan, it doesn't matter where you live, your country will be affected. Which is why it's so important to understand we are all interconnected, and what happens in one place, especially a large contributor, it affects own stock market. And a lot of people here in the UK, when I tell them about all these things that are going on in America, they look at me and they say, well, that's America, it's not here. And what they just can't fathom is how the very fact that the way the US is set up affects every single person on this planet. And if you don't understand that and you can't see that, it's your responsibility to educate yourself and to find out that this is a very serious situation, that the US stock market can and will have a massive correction imminently in the future, which will be a minimum of a 50% correction. So you're talking about a 50% correction of the US stock market. That's all of that. And you see how huge Apple is as a company. Well, in comparisons to a 50% stock market correction, well, Apple is extremely insignificant. But when you roll up 15 Apples, that's huge. So you got to watch how this report unfolds to see exactly the extent of damage that could be created should a catastrophic event occur. And it's not should, it's when, because inevitability is certain. Now, whether that certainty falls within your life frame, that's another question. But it doesn't hide from the fact that the mass expansion of credit is creating these vast numbers on a computer screen. Nowhere else. These numbers don't represent narrow money, represent gold, they don't represent coins and banknotes, they don't represent silver or Bitcoin. These are just numbers. Now, European Union represents 8% of the world stock market, which you can calculate roughly 7 trillion. The Japan stock market, 7%. Again, 6.8 trillion plus minus. China And this is actually extremely interesting, and this probably would require a bit more research because it's saying it only represents 2%. So I think we're going to just have to leave a pinch of salt with that one. And 31% represents the rest of the world stock markets. Okay, on to the next one. Broad money. According to the CIA Fact Book, let's just take a quick look at what the CIA Fact Book actually is. Produced for US policymakers and coordinated throughout the US intelligence community, marshals facts on every country, dependency, and geographic entity in the world. We share this information with the people of all nations in the belief that knowledge of the truth underpins the functioning of free societies. Well, basically, that's total bullshit. So I won't read any further on that. Right, broad money. According to the Lie book, the total value of the world's money is 80.9 trillion. This includes coins, banknotes, money market accounts, as well as savings, check-ins, and time deposits. So because it comes from the fact book, I think we should estimate these numbers a little bit higher and maybe add 20 to 200%, something like that. So yeah, it roughly looks, roughly a little bit larger than the stock market, the world stock market. So this is telling me that it's including all the world banknotes, all the money market accounts, as well as savings, check-ins, and time deposits. And I can only presume that that's saying to me that it is taking all of the stock market into account, and it is also putting all the narrow money into it as well. So it's adding this column to this column, and this column's representing, as I said, the banknotes and the checking deposits. We are also including the cash and banknotes. So we've got the 5 trillion added to the 28.6 trillion, which is 33.6 roughly, plus this one. So we're looking at 103.6 trillion, but this is actually telling us it's 80.9 trillion. So either I've got something wrong there, or this number here is wrong and there should be a bunch more squares. But I'm sure somebody out there will be able to correct me on that. So if you can, that'll be fantastic. Okay, moving on. All global debt. Bear in mind, we're looking at an 80 trillion block here. And don't forget, now that we're rolling through the trillions, just let's rewind back up here and, hey, this is Warren Buffett. Hey, this is the world above stock of silver, 1 billion ounces of silver, which I believe is the yearly mining ratio, plus minus 100 million silver ounces or something. But we're roughly looking at that as the yearly mined amount pulled out the ground. And remember, a load of that goes off to commercial uses. So back onto the global debt. The global debt, the total amount of global debt, it should say, is estimated at $199 trillion. 29% accumulated since the 2008 financial crisis, with a special thanks going out to all the quantitative easing governments out there. And this 29% will still be growing because there's still backdoor QE going on globally. It's just not publicised. And that is purely keeping up the stock market. And remember, the stock market size, it's only a 70 trillion. So the reason they're pumping all this global debt into the stock markets is to prevent the system from collapsing. Included in the above amount is $59.7 trillion of total sovereign national debt. So that's every single country's debt levels added up. So when you look at the debt calculator from the US, it currently stands at, I think it's $19 trillion. So a third of that, in fact it says it here, 29% United States, this is going to be the debt calculator, that volume there. So when we all look at the States and think, wow, the US is super fucked, well, just look at, everything else that's going on. And it makes the US look fairly insignificant in comparison on the global scale of actually just how much debt is out there. A quarter of it is from the UK. No, a quarter of it is from Europe. And Europe, in comparison to Japan, just how small is Japan as a landmass? They've almost got a quarter. That's a crazy amount. And China, 6%. I'm not sure about this this China stuff. it just, I mean, I see China as a huge nation with vast amounts of cash. But maybe this is just representing that they're not actually too much of an indebted nation, and that's probably what's going on here. Because obviously they're the ones that are buying up, or were buying up, a lot of the US debt, treasury bonds, and they are now selling them back and releasing up a lot of that cash that is tied into this debt. So that would mean that the US debt is increasing, not only because they're increasing the national sovereign debt, but they're also having treasury bonds returned to them for cash, and then I'm sure that cash is then being used for gold and silver, because they know full well that this system is impossible to maintain, and the commodity values on real money are just going to continue to increase in value. So this is it's getting into some pretty scary visualizations, I think, here. So 20% is the rest of the world. Moving on. Now here's the big one. Derivatives. Remember? The whole global debt, 60 trillion, obviously outdated information, add about another 40 trillion to it. And especially once they start really opening up the gear on the next QE stage, that will definitely jump to 100. Derivatives. The low-end estimate of the size and scope of global derivative markets is 630 trillion on a national contract basis. The low-end estimate of the size and scope of global derivative markets is $630 trillion on a notional contract basis. What's a derivative? A derivative is a contract between two or more parties that derives its value from the performance of an underlying asset, index, or entity. Just look at all these squares as we go down. Examples of derivatives: futures contracts, forward contracts, options, warrants, swaps. These are words that you need to look out for. Banks typically use high amounts of leverage to attain these positions. Some derivatives, such as commodity futures, are traded on regulated exchanges, such as the Chicago Mercantile Exchange, CME, COMEX. And regulated? Well, we know it's not regulated because of the old Deutsche confirming price rigging. However, the majority of derivatives are traded outside of exchanges between private companies and are called over-the-counter trades. Collateralized debt obligations and credit default swaps are two derivative types that are now infamous for their roles in the 2008 crisis. However, we've reached the low end estimate of 630 trillion. Before I continue, I just want to recap exactly how many squares we've just gone through. 630 trillion as a low end estimate, and these things are never at the low end of the estimate. There is always a revision to the statement several months after any official numbers are given, and I think it goes without saying it's going to be nowhere near the 630 million. And this is why all the banks are getting worried, because many of these derivatives are blowing up. A little blow here, a little blow there, but because one way or another they all link and counterlink, that it doesn't take long before a chain reaction starts occurring through the derivative market. And when you look at the size of that huge, colossal amount, bearing in mind silver, it's just that little corner up there, thousands of times larger than the yearly above stock inventory of silver. Now that really puts it, for me, into perspective of how undervalued that is, and how all this is just monopoly. It's just monopoly money ready to blow. And how people cannot actually see that and visualize that. I hope that by doing this video, it would help a few people to see that. Now, the gold market, again, was just a slither. So, the gold market, that size. I mean, how many of the world's above gold stocks can you fit into that derivative market? And that's at the low end estimate. I would have a quick gauge and I would say at least 100 in the low end estimate. In fact, we can tell by 7.8 trillion. So it's roughly, give or take, 72 trillion. Nothing to these boys, is it? So I think I made my point there. Let's check out this. Okay, so the high end estimate for the value of all derivative contracts is as high as 1.2 quadrillion. Now, I've heard the word quadrillion mentioned a few times, whether it be on some news or whether it be on some other videos on here. So you're basically saying you're doubling the derivative estimate. And they're saying, it's going to be somewhere in the middle. Well, time's gone on, and I kind of think that 1.2 quadrillion is going to be an underestimate. So you'd probably be more like pushing the 1.5 quadrillion, which now you're talking about 300 times the gold market. Now, what happens when all this derivative market gets flushed? What happens to all that wealth, you know? I'll continue with that in a moment. Let's finish off this statements. Views on derivatives. Many finance professionals consider derivatives to be zero-sum traders. In other words, there is a winner and a loser on each side of the bet. However, other experts warn that the massive size of the derivatives market could contain significant risk and consequences to global markets. Really? There's a lot of guys coming out at the moment. You got Warren Buffett, funnily enough, one of the examples above, saying that Yeah, I'm thinking about taking my money out of the banking system. It's just not making any money there, and if things do go negative, which they are happening in Europe, where he does hold large sums of cash, uh, it just makes sense to move it out. Now there was another video, I think it was AMTV, where just today, yesterday, where he posted about this potential move that Warren Buffett's openly talking about in the news. Now, he's talking about bank runs and he's talking about getting his money out. Now, why would somebody not feel that safe with leaving his money in the bank? Probably because he knows what's kind of going on, because he played golf with these guys, you know, he dines with these guys. He's one of these guys. You know? I believe one of their things they have to do is they always have to warn the markets, as it's a game to them. This is a game. It is all a game. How much can I rob off the people? So let's just take a quick look. Quote, the positives are derivatives can be used to help allocate and take price risk out of everything from corn to cattle to stock. There are good derivatives that are self-regulating, such as interest rate swaps and currency forwards. I've been working for exchanges for 41 years. I do not think regulation is compatible with an efficient market. I think derivatives promote efficiencies. Dr. Richard Sandor. I think you're deluded. And these guys love to just stick out a nice little bit of propaganda. I mean, what a load of BS. Self-regulating. Yeah. Oh, and here's one from Warren Buffett. The derivatives genie is now well out of the bottle. I'm sure he's meant to say the derivatives genie is now well and truly out of the bottle. And these instruments will almost certainly multiply in variety and number until some event makes their toxicity clear. Central banks and governments have so far found no effective way to control or even monitor the risks posed by these contracts. In my view, derivatives are financial weapons of mass destruction, carrying dangers that, while no latent, are potentially lethal. Warren Buffett. Yep, and that's the end of that. Yep, that's a lot. And remember, Bitcoin, not that I'm condoning the investment of Bitcoin, because personally I've looked at it, it seems fundamentally okay as an idea, but you're pretty much, in my belief, buying nothing. Now what it is that you're buying is a theoretical number on a screen, and you do need the internet to be working for that, which there's been a lot of talk that governments can easily do a kill switch on the internet and pretty much take us back to the Stone Ages with an EMP pulse. Now, I'm not here to doom and gloom on all that, but it's worth taking into account when you're making sound investments. So it's better to go with sound, tangible, multi-century proven wealth. Or you can take a punt on something that's been going for 7 years and has a lot of hype. It's totally your call. But do your own due diligence on what you believe the outcome's going to be. Now, obviously, I appreciate diversification. So let's just take a quick look again at just exactly the size of that derivative market. So here we've got, bearing in mind the gold was that size, the silver was a blip, and yeah, you can fit the entire silver market, the entire Bitcoin market, and I would probably safely say the remaining alt currencies all into that one box. You'll have a few fiat currencies fitting into that box, which it's not worth the paper it's printed on. It is, and from what I've heard, you can't even use it as toilet paper because it blocks the toilets. And funnily enough, I flew through Malaysia airport last year sometime, and I bought myself a meal, and I had to exchange into Malaysian ringgit some US dollars that I had with me, and the currency that was given to me in change was the ringgit. And this is the first note that I've ever seen that is plastic. It's not even paper. And it just feels like plastic. So you can't even use it to keep you warm. When this whole market goes and collapses, I remember seeing pictures of people, I remember seeing images, and you can actually see this starting to happen in Venezuela, where people are needing rucksacks worth of cash just to go buy a loaf of bread. One benefit of paper fiat currencies is, at least, worst case scenario, you can use it to keep yourself warm. You can set fire to it and you can cook whatever food you have. Whereas with this plastic currency, this plastic fiat note, it's just going to melt into a little glob and release a load of toxic fumes. A bit like this derivative market. One big toxic fume. So there's the 630 trillion underestimate with a higher estimate of 1.2 quadrillion, and I'm saying it's going to be about a 1.5. It's just astronomically insane what's going on out there in the global markets, in the world of business. These bankers are doing these derivative trades. They're making lots of money out of it. But the real impact, and I personally believe that where this money ends up, the people that are controlling huge funds, huge banking funds, huge savings funds, like Buffett, like Bill Gates, like any hedge fund manager, when they start seeing this market taking a tumble, starting to implode, you can guarantee that 100% of this derivative market will explode, because all this is a build-up of debt and bad bets, which actually represents way more than global debt, way more than the US debt calculator, the UK debt calculator, I believe. Let's just check it out. So we're at 1.7 billion. 1.7 billion. These US just called it 20 billion. 1.7. So for easy mathematics, and again, I'm not breaking down the numbers 100%, but just rough numbers, the UK is representing 10% of the United States. So we are about 2.6% of this European bubble, this European sovereign debt. And then you've got France, you've got Italy, you've got Spain, you've got Portugal, you've got Greece. Don't forget Greece. Hopefully this is putting it into perspective for you guys, just how fucked the system really is. How when these companies lose 10% of their stock, 5% of their stock, somebody down here is going to be putting a bet on that stock going up. Somebody is going to be putting a bet on that stock going down. For every winner, there's a loser. For every action, there's a reaction. Everything inside this derivative market is the catalyst for the global meltdown that will be occurring. It's just a case of when will it be occurring. And you'll see that everything that happens in your life, your day-to-day business, will be affected massively, more than you can even understand. For example, what do people need every day? People need food, right? The way the food industry works is orders are made and it's paid via credit. Now imagine a world where the derivative market has started to implode, and the chain reaction of that implosion spreads right down to those orders not being able to proceed. It stops the circulation of food to the shops. That in turn starts to dry up the shelves. Which in turn leaves people in a very scary situation. I'm not trying to scare people, I'm trying to make people aware. The problem with society is people don't care. People are oblivious to what's going on. But in order to survive in this world, you have to understand this world. And there are massive agendas going on out there, all in the name of greed, all in the name of control. And I'm going to leave it there, guys. So hopefully you found this extremely interesting, and I've found another couple of stories that I'm interested in doing a video on, so I'll get on to doing those. I hope you liked this video. Please do subscribe. Make me reach 100, because all I'm trying to do is raise the awareness to as many people as I can. And if you have any comments, please do leave those also. I'll definitely get around to answering every single one. I really do appreciate any form of feedback, good or bad. And please do share this if you find somebody that you think will benefit from this information. Thanks a lot.